E2. Good afternoon, Team Powerhouse. We are super excited today. Guys, we've been working on a lot of stuff this year, but more importantly, focusing on becoming relevant in the room. We talked about Prosperity being our premier carrier for our term products, the US based. We're super excited to have today Mr. Jaime Leon. He has a great long-standing relationship. I won't take the thunder away from him with Mr. Phil Hudgens, my mentor. He's been in the business for a long time, developed products, done just some amazing things. And he's now with Prosperity. He's the architect for a couple of the bonus programs and a couple of things that you guys will learn and to love here at Prosperity. We're excited to have him join us here at Powerhouse Financial to really go over the products, go over the incentives, go over the things that they do best than everybody else. And guys, like I said, we really want to become relevant in the room with Prosperity. So this season, this quarter, which started April 1st and will run April, May, June, we're going to have some special incentives. Stay tuned at the end of the call, and we're going to announce that today. Guys, Christmas in July. Let's make sure if you want to fund your entire Christmas in July, right, put a bunch of money, a boatload of money into the bank account and have the best Christmas ever, this is the time to run hard with Prosperity. So without further ado, guys, I'm going to kick it down to Boca Raton, Florida, to our friend, Mr. Jaime Leon. Your call, sir.
Oh, thank you so much. And again, I really appreciate the opportunity. I love getting in front of you guys. I know it's been we've just kind of started the relationship, but it's always fun. You guys are really excited. You're always happy. And that doesn't always happen in this business. So it's good to see a bunch of people with smiles and are really excited about writing business. That's what we love at Prosperity. We love to try to make your job as easy as humanly possible. The nice thing is I was an agent for about 10 years. So I know what you go through on a daily basis. I went out and I knocked on the doors and I sat kitchen table to kitchen table. No one kind of does that anymore, but I know what you go through. So when we design product not only with the client in mind, but we also design it with the agent in mind. We want to make sure that you have a product that you can get approved, because let's be truthful, if you're spending a lot of time and you don't get an approval, you don't get paid and you get an upset client. So we want to try to avoid that as much humanly possible. And we really want to make your life as easy as we possibly can. So I'm going to go through 3 products today. I'm going to talk about our flagship term product number 1. And then I'll talk about 2 final expense products that we have. And we won't go dive deep on the other 2. We'll really dive deep on the term product. And then hopefully, if I do a good job and you guys like me, I would gladly come back and talk about the other 2 products in depth. Or if we all want to get together somewhere and have a dinner or something, we could really do a deep dive on all 3. So that's kind of the plan today. And if that's good, I'm going to try to be technology advanced here and share my screen. And God knows that what could happen when I do that. But let's see what happens. It doesn't always happen well. All right.
We believe in you. We believe in you.
Yeah, well, you shouldn't. All right. There's a nut. I want to get one. How do I? Let me see if I can take this down. I want to load another PowerPoint. So bear with me for just 1 second. Like I said, it's always an adventure. There we go. God, look at that. Look how smart I am.
Woohoo!
Yeah. Woohoo.
You don't know what just happened, because it usually doesn't happen that nicely. All righty. Without further ado, the product that we have is our flagship term. We call it Family Freedom Term. Just a real little bit about the company, just to kind of give you an idea. We're called Prosperity Life Group. If you go out and you look, you're not going to find Prosperity Life Group. We're not an insurance company. Prosperity Life Group is a holding company. We own about 4 or 5 different companies underneath of our umbrella. We are in all 49 states. The only state we do not write business in currently is Connecticut, but we do write in all the other states in the country. We are an A- rated company, so you and your clients can feel very secure from a financial perspective for us. And I think the most important thing on this slide that you need as an agent to understand, we are an insurance company, and the only way we distribute our product is through you, the independent agent. We do not have a direct to consumer. I don't have a website where a client can come and buy insurance from me. I do not compete with you on a daily basis. You are my client. You as the agent are my client. Obviously, your insureds or the people that you go out and talk to are your clients, but we are here solely in business to support you. And we do not compete, as I said, against you on a daily basis. There are other carriers that do have those direct to consumer avenues. We are not one of those. We've always been an agent focused type company, and that's the way we will always be as long as I'm with Prosperity. Okay, so what do we have? It's called Family Freedom Term. It's a simplified issue term policy. And here's really kind of where the rubber meets the road. It's a product that's available for ages 18 through 75. 50,000 is the minimum face amount. It goes all the way to 500,000. For you, the agent and the client, it's a simple application process. We do not require any medical exams. There's no blood, there's no urine, there's nothing after. It's an easy e-application. The only way you can sell the product is on an e-application. That can be done either face-to-face or over the telephone. We're going to give you a decision. It's an instant decision on a simplified issue. We will render a decision, either an accept or reject, within 60 seconds of you and your client going through the application process. So you're not going to wait 7 days or 5 days or 14 days to get an answer. You're going to know right then and there when you're meeting with the client. And that, again, is a huge advantage for you because you'll know if the client qualifies or if they don't. And if they don't, you'll have then the ability to be able to pivot to another product if it's because of underwriting or drugs or prescription drugs or something like that. So it's much better to know right then and there when you're with the client than to find out after the fact and have to sell the client a second time. Most cases are going to be determined based upon some third-party information. It's the typical stuff. We're going to do an MIB, a script check. We're going to run driver's license, all that stuff. We'll do a height, weight. There are answers to medical questions. And then depending upon the answers and the services that we run, that's how we're going to render the decision. The client can pretty much buy any duration they want, a 10, 15, 20, 25, or 30 year. This product is convertible to a whole life policy. They either need to convert it in the first 10 policy years or age 75, whatever would happen first. Now, if that's not enough, that you get 18 to 75, 50 to 500,000 with an instant decision on an e-application, we're also going to give the client living benefits standard at no additional premium in the contract. They're going to have the terminal, the chronic, and the critical illness included with this particular product with all the benefits that I said before. Why would you, the agent, be interested in selling the product? Why is the client interested in buying it? Obviously, the instant underwriting decision in most cases is huge. We do have an accidental death benefit rider. We'll talk about that you can add on that can double the coverage up to 250,000. We do have some other riders you can add on. We have a waiver premium and a child's term. We'll go through that. And what else? We've kind of put something else together for you, the agent. We have a quarterly sales bonus. So the way that this bonus works is every quarter, and it started 4/1 for the second quarter. The 3 products that I'm going to touch on today, they all 3 qualify. So the way our bonus works is if you can write 25,000 of issue paid premium in a quarter, then you earn a 10% bonus all the way back to $1. Now, the nice thing with this particular bonus is once you've done the 25,000 of issue paid, the bonus kicks in. There is no upper limit on this particular bonus. So if you do $100,000 in a quarter or $50,000 in a quarter, we're going to apply that 10% and we're going to send you a check for that in a bonus. We do that every single quarter. We've been doing it for the last 4 years. Now, there are some other competitors that have come out with a similar bonus. The difference is with their bonuses, they have all kinds of levers that they can pull. Some of it's a persistency bonus, some of it's a longevity bonus. The business has to stay on the books for. We don't do all that. It's really easy. You do the number, we send you a check. That's the way it works. The nice thing with this as well is once you've earned the bonus, it's your money. It is not charge backable. So that's a big, big deal. Once you get the cash, it's your money. You do whatever you want with it. And as I said, we run this every quarter, and all three products contribute to that $25,000. So here is where the product is not currently available. So you can see the states there in front of you: California, Connecticut, Hawaii, Maine, Montana, New Hampshire, New York, North Dakota, Pennsylvania, and South Dakota. Everywhere else in the country, the policy is currently available. Okay, real quick, here is the issue ages. Now, I said it's 50,000 to 500,000, 18 to 75. Not all durations are available. Not all face amounts are available. So you have to make sure that the client fits within the age parameters. But just for real simplicity's sake, anywhere 18 to 40, ages 18 to 45, everything's available. And then it goes down as the client would get older. What I will draw your attention to, though, is ages 66 to 75. If a client is reasonably healthy, they can get up to a $100,000 face amount on a 10-year term. There are very few carriers that will allow you to write a policy up to age 75 on a 10-year chassis up to a $100,000 face. So that could be a great marketing advantage for you if you can find those clients that want more than just final expense. They're a little bit more healthy and they need a higher death benefit. Now you have a product that you can offer. As I said before, it expires at age 100. It is a term policy. We do the simplified issue. It's either approved or declined. There is male, female. We do run tobacco or non-tobacco. It actually should say nicotine. And we'll get into that in a second, what that looks like. But for this particular product, any use of nicotine in any form is going to be classified as a smoker. Our other products are not that way, but on this particular product, it's a little bit different. We're going to base the premiums on issue age, the gender, as I said, the nicotine, and they're fixed for the entire term period. Your client can pretty much pay for this any way that they want. The most popular, obviously, is a bank draft, a monthly bank draft. That is 99% of how the policies come in the front door. If they do pay by that monthly bank draft, then we will advance commissions on this particular product as well. So that may or may not be important to you, but that's how you get the advances, by the monthly bank draft. Okay, in the old days when I first started, we used to have modal factors. We still have them. Nobody knows what they are because all these quotes are now done electronically. They're already built in. But if anyone ever asks you, there is a modal factor if you want to spend a lot of time converting annual premiums to monthly. There is a commissionable policy fee. It is $80. That's already included in the rate. You do, as I said, get commissioned on that particular $80 policy fee. As we've talked in the past, the underwriting decision, it's either approved or declined. And here's what we base it on. It's height, weight, application health questions or answers to those questions. We're going to pull an MVR. Very important for this particular product, your client must have a driver's license. If they don't have a driver's license, we will not issue the policy. We do pull an MVR on every client. We'll do an MIB. We will do the script check. And any face amount above $250,000, we're going to do one more piece of underwriting. It's called true risk. And that basically takes about 1,000 different data points from your client. And it does a financial underwriting off of that particular true risk segment. So it's another piece on a higher face amount. And then that's what we render. Those services, what we render to make a decision. All of the policies, as I said, are submitted through our point of sale, our e-application process, which is Aptical. And again, you will get that decision within 60 seconds of you putting the information into the system. We're going to render a decision for you. Okay, as I said, this policy comes standard with the living benefit riders. Those 3 riders are the terminal, critical, and chronic. And then I'll talk to you real quickly on how they work, because ours work a little bit differently. So I want to make sure I point them out to you. The terminal illness is pretty straightforward. If the client is diagnosed with a terminal illness, which means they have 12 months or less to live, they can access up to 95% of the death benefit, and they can utilize it any way they see fit. It's a one-time acceleration, and again, it's up to 95%. The critical and the chronic work a little bit different. So we'll talk about the critical first. Your client, if they're diagnosed with a critical illness, which is going to include the heart attack, stroke, cancer, kidney failure, major organ transplant, and the real big one, a diagnosis for ALS. They can accelerate up to 25% of the death benefit, but they also have the ability to accelerate it multiple times. So if they, for instance, if they were diagnosed with one of those conditions, they accelerated 25% of the death benefit. At the end of 1 year, if they're still alive, or if they're diagnosed with another condition, they have an opportunity to accelerate it again. They can do multiple accelerations as long as they have that 1 year wait in between. So you could have someone that very unluckily got diagnosed with a major heart attack. They recovered 2 years later, they developed cancer. They could accelerate multiple times for those conditions. It can be the same condition or multiple conditions over the life of the policy. Now, the other thing I pointed out real briefly was the diagnosis for ALS. Not all critical illness benefits will utilize a diagnosis of ALS. So this is very, very important that this benefit is built in on that critical illness acceleration. What you will see, and I don't know if you've experienced this yet or not, but you'll have a client, hopefully never, but you probably will, that you'll get a phone call from the insurance company or the client one day, and they're going to say to you, hey, I'm really, really sorry, but I can't make my insurance premium payments anymore. And obviously the question is, oh, well, they must have lost their job, this, that, or that. A lot of times they may have a critical or chronic illness. It's kept them from working. The medical bills have piled up. They don't have the resources to continue to pay their premium. But if you then remind them, oh, by the way, in that policy I sold you, it had accelerated benefits built in. Talk to me a little bit. Tell me what's going on. Let me see if I can help you. A lot of times the client doesn't realize that they have these benefits inside their policy. And they don't realize it until A, it's too late, or B, they're at a really bad place and they call you for advice. And that way you can then say to them, we can make sure the policy stays in place. We can give you some cash. We can make things a little bit easier for you. It's a great, great benefit. And like I said, most people forget they have it. It's a great persistency benefit. Make sure your clients know they have it, because the next agent that walks through the front door and sells them that cheap term policy, it may not have the living benefits. This will keep your policy in place. So just kind of a sales idea for you on that. The other benefit, the third one, is the chronic. Now, this is the one that you're probably going to have a client that utilizes the acceleration multiple times, because you can have a client that gets diagnosed with a chronic illness, and that chronic illness can last for years. The way they qualify, it's 2 of 6 ADLs, or they have a significant cognitive impairment. If they're diagnosed with that, they again can utilize that acceleration multiple times until they zero out the contract, if they choose to. Again, there is a 1 year wait in between, but they do have the ability to continue to accelerate year after year if they so choose. Again, I'll touch on it one more time because I just think it's so important for your clients to understand that they do have these benefits. Remember, make sure they're aware of it. These are me benefits inside of a life insurance policy. Most life insurance policies are for family members. They're not for the actual person buying the policy. This gives them the ability to utilize some of the benefits, God forbid, inside. So I see we have a question. So I'll grab that real quick if I can. And if not, I'll get them all at the end. I'll get them all at the end. How about that?
Okay.
Okay.
Go ahead and write your question in the chat so that way he has it at the
Okay.
end.
Okay.
Write the questions in the chat.
I will.
Okay, so as I said, we have 3 other benefits that you can purchase or the client can purchase, and they are an additional premium. We have an accidental death. So I'll explain to you how that one works. Obviously, if you put this on, the client was to die in an accident, they would get the accidental death benefit payout as well as the traditional payout on the term policy. The way this rider works, it's a 1-for-1 benefit. So if you have a client that buys a $100,000 face amount or a term policy, they purchase this rider, they'd get another $100,000 in the ADB. If you have a client that has a $500,000 policy, we will cap it at $250. The most that a client can purchase is $250 of the accidental death benefit rider. So in that example, if they had a $500,000 term, they were to die in an accident, they had the ADB rider, they would get $250 from the ADB rider and $500 from the original term. So the total payout in that scenario would be $750. Again, great rider. It's very affordable. I would encourage you to look at it whenever you're selling a policy to put that on for a couple extra dollars. It could really make a big difference. We have a waiver premium for total disability. Pretty self-explanatory. If their diagnosis is totally disabled, we'll make the premium payments for them. And then we have a child's term rider. This one's a little unique. So it works this way. At the time you sell the policy, you can sell the child's rider. You elect either $5,000, $10,000, or $15,000 at issue. You can put up to 5 children onto this particular rider. It's only one premium for one child or 5. It's all the same. And you can elect what that death benefit will be. Again, it stays on there until age 21. And then after that, it would drop off. So pretty self-explanatory on that, but it is a nice little add-on that you can be able to put onto the policy. So this chart real quickly just gives you an idea where your client, whatever their age is, it'll give you an idea what coverages they qualify for, what term periods, and what riders they can get. And it's for each age as you go across the chart. So everything we just covered, we put in a nice, quick, easy chart for you. As I said before, we do have that nicotine question, and it's any use of nicotine products in the last 36 months. So it's going to cover it all. Cigarettes, e-cigarettes, vaping, cigars, pipe, tobacco, chewing, snuff, all of that. The answer would be yes if they're utilizing it in the last 36 months. Now the question, I'm going to head it off before I get it because I'm a good lawyer. It doesn't say anywhere in there, well, what happens if they're marijuana users or they're utilizing marijuana? It is a nicotine question, not a marijuana question. So in that instance, the answer would be no if they're utilizing marijuana. But keep in mind, if it's prescription marijuana or they're utilizing it for some condition, they could get turned down based upon why they're utilizing it. If they have some condition that they're utilizing marijuana that we would not normally cover, we're not turning them down because of the use of marijuana. We're turning them down because of the health condition. So you will see it that sometimes, and I get phone calls from people, they'll say, client got denied, but they're marijuana users, and you said that'd be fine. Well, yeah, but the health question, what is their health issue? And that's usually the reason why they're turned down. So just wanted to cover that real quick. We do have a height weight chart. Again, incredibly liberal, the height weight chart. It's about 4 tables built into it before we would decline someone. Give you an example, 6'2", they can be a minimum of 127 pounds and a maximum of 302. So the client that falls within those ranges, if they don't have any other conditions that would keep them from getting the policy, they're just a little overweight, they would still be approved all the way up to 302 at a 6'2". Now, there's no gray area on this height weight chart. They must fit within inside the minimum and maximum guidelines. If they're 303 or 305 at 6'2", we will not write them. So it is a pretty hard fast, but there's a lot of room within that height weight chart to be able to write people. What we also try to do to make it as easy as humanly possible, this is available on our website. Once you become contracted with us, we give you access to our website. All of the marketing materials, these presentations, training, everything is out there. We also have broken out the application, and these are a list of all the conditions that a client could have that we would decline. So you know going up front, if your client has one of these issues in the look back periods, we would not take them. Just to give you an idea so you can do some frontline underwriting, so you're not wasting your time or the client's time. The big things I'll point out for you that really jump out quickly, diabetes is the big one. Any client that has been diagnosed prior to age 50 with diabetes will not get approved for this particular product. You'll look at the other diabetes questions, and it's a 5-year look back. The other big thing you will see is heart attack is a 5-year look back. Most companies are 7 or 10 years on a look back. We're 5 on that particular condition. So we're trying to be as upfront as possible with you, the agent. We're going to tell you right up front what we will take and what we won't take. We do the same thing with a prescription drug list. We will tell you what the drug is, and again, it's available in written form. We'll tell you what the drug is and if we will take it or if we won't. Now, the one thing I'll caution you, there are some drugs out there that are multi-use drugs, and I'll give you a real quick example. The big drug out right now is Ozempic. Okay, so that is a diabetes drug, but in the last probably year and a half, there's been a couple stars, Kim Kardashian to be one, who's decided it's a great weight loss drug. So you may have a client that you'll see that it comes up on the RX check that they're taking Ozempic, or they tell you they're taking Ozempic. That's a dual use drug. When you go through the application, it's gonna pop that they're taking Ozempic, and then we're gonna prompt you and say, why are they taking it? Is it for diabetes? And you'll have an opportunity to say, no, it's a weight loss drug. And in that instance, the policy in most cases will still go through. In the old days, if it popped for a diabetes drug prior to age 50, it'd be an outward decline. So, and that's just one example. There are other drugs out there that are dual use. Just because they're prescribed, it's not necessarily the condition that would decline the client. Sometimes they're prescribed for some other condition. So just to give you a little bit of flavor on that, it's not always a hard decline based upon what the information that comes back. If you have a client that has any of these conditions in those timeframes, do yourself a favor, do a client a favor. Don't go any further with the application process. More than likely, it's going to be a decline. That's when you would pivot to another product. We've got some other options that you could utilize, or there may be another carrier that you use. We don't want you to waste their time, your time, and just go through the whole process, collect all the information, and then find out you get a decline. We're going to try to tell you that upfront as early in the application process as possible, so you're not wasting a lot of time as you go through it. Very easy. As I said before, we've talked about how the application works. With telesales, you can do it either way. Again, here's what the front screen looks like when you go to do a quote. That's what it'll look like once you run a quote, give you all the different options. And then the way it works initially is once you're happy, the client's happy, we're going to send out the first documentation. And really, this is just for them to sign that we can start running all the background information. It's really the HIPAA form. and that allows us to start the underwriting process. So they're going to say yes. We're going to send them an email. They're going to open it up. Most cases, they're supposed to read it, probably not going to. They're going to sign it, send it back, and then we start the process. And then it's like you would do a paper app. It's the same thing. It's just broken down in an electronic format. Again, it's very easy. It's very straightforward. As I said before, the driver's license is required because we do pull an MVR. Social Security number is required as well. And then you just go through the normal application process. Now, what you'll notice is you're going to ask, well, these are all the forms, everything's done, but you haven't asked me the important stuff, right? You haven't asked me for banking information. You haven't asked me for beneficiary. You haven't asked me, all the stuff I'm normally. No, what we're going to do is once we're okay and the client says, yes, I want to go forward, now we're going to go ask all the medical questions. Once we do that, we're going to render our decision, and you're going to see this screen. And it's going to be one of three things are going to come up. Either the proposed insured's been approved, the proposed insured is not eligible coverage, or we referred it back to home office for underwriting. Now, obviously, the first one you always want to see is the client's been approved. If you see they're not eligible, then obviously at that point is when you would pivot. If you get one that says referred back to home office, I would advise you at that point to withdraw the application and look at a different product. What it means is if it was referred back to home office, one of the answers that the client provided us is different than what we found in the third-party background during the underwriting process. The way to disprove that is the client is going to need to provide 5 years worth of medical records at their cost and send it to us for us to continue the underwriting process. In my 30 years experience, I've had about 10 clients that wanted to challenge the underwriting. I've had one or two that it came out in their favor. 99% of the time, the clients won't go get the medical records, or if they do, it's going to back up what we found. So to save you a lot of trouble and the client a lot of trouble, I would withdraw the app if you get that decision. If the client is insistent that they want to continue the process, then let them do it. But I'm trying to give you the out to make your lives easier. If they're insistent on doing it, then let them do it. Most cases, as I said, they're not going to follow through, but there's no reason to argue with the client at that point. So again, here's what you're going to see. As I said, here's the refer to home office. And once everybody is happy, if that client is approved, we're going to give you that one more screen that says, okay, this is what you bought. This is the summary. It's a $200,000 policy. It's $139 a month. Are you good with that? Do you want to continue? They're going to say yes. And then we go get all the other information because we're pretty sure at this point, this policy is going through, the client wants it. Now let's go collect all the rest of the information. And again, it's beneficiary, existing, if they want any riders, how they want to pay for it, their banking information, all the normal stuff. Just like you would do with everything else. What's the frequency on billing? Again, all that normal stuff that you would normally do. Once you've gone through all that, you're going to certify it as the agent. If there's a scenario where you want to split commissions with another agent, you can do it right here in the portal. You hit yes, you put in the other agent's information, and we'll split it accordingly as you ask. The last piece is your client has the ability to get everything delivered to them electronically. This is not a requirement. It just makes life a little bit simpler. If they choose to have it all done electronically, then we will send them all their information electronically. We will then set up a portal for them where they can go in and they can self-service their policy if they so choose. If they say no, we would just send it to them the old-fashioned way, just like they've always gotten. Here's some of the things that they do choose the portal that they can do. They can go in, they can change their premium payment information. They can get letters or statements or forms. They need to change their mailing address or how they want to pay their premiums. They can do all kinds of self-service right here on their portal if they choose that Go Green option. And if they don't choose it in the beginning, they always have the ability to switch if they choose to do that. Here's where the final signatures will get collected. You will be notified during the process. So once that signature goes out to your client, this is what it's going to look like. Once they've opened it up, they've signed it, you're going to get the one at the bottom that says close complete. Then you're going to hit submit, send it to us. We'll receive it the next day. We'll process this. Once the payment clears the bank, it usually turns around in about 48 hours. All righty, so that's real quick. I know I went through a lot, so I'm going to take a breath, see if there's any questions, and we'll switch over to the other two real quickly. Any questions?
Yes, I have a question that I posted on the chat.
Okay. Let me see if I can find that. Can you please explain about remote app? Sure. Is that the question, Valerie?
No. It was what happens to your death benefit once you utilize either chronic or critical illness benefit?
Okay, it goes down by the amount that you're accelerating.
Okay.
So, for instance, if you had a $100,000 policy, if you accelerated 25%, you'll be left with $75,000.
But that period, there's no reevaluation or anything like that.
No, I mean once you've accelerated and received the cash, then your death benefit would then be reduced for the life of the policy.
By the amount that I advanced only.
Yes, ma'am.
It doesn't.
Correct.
It's not determined at that time. You know what I mean? Like I was told that at the time, if you have a chronic illness and you pull out that 25, then the death benefit gets reevaluated depending on the condition that you have at the time that you obtained the advance.
Absolutely not. No, we don't re-underwrite the policy.
I love you. Marry me.
Well, I got to ask my wife. I don't know.
Yeah,
I'm
I have a.
going to get in a little trouble now.
No, here's the deal. I had never heard of that. And I tried calling. Armando and Valerie can remember that I had this question because I don't know who told us, but I was freaking out because I've never heard of that. If you take an advance, you have 100. I took 25. I have 75. That's the end of that.
Accurate.
Okay,
Now
thank you very much.
Now there are some carriers out there, and it's not necessarily in this particular, on an acceleration, but there are carriers out there. If you did have a client, and you have to be careful about this, and it happens a lot in DI policies, sometimes in life insurance policies. But if you do have a policy where a client was to die in the first couple of years, some carriers re-underwrite the policy. And they see if, say that you have a client and they die in the 15th month and they answered a question that said, no, I don't have XYZ disease. And then they wind up dying from that disease. Some carriers will then go and pull medical records and they will re-underwrite that claim.
Oh, of course. No, I'm okay with that because you lie. You can't lie.
But I've never heard it on a living benefits where a carrier would re-underwrite.
Neither had I. Neither had I. That was my problem. Thank you.
Yeah, we don't do that. So
thank you very much.
The remote
my question was the remote app. Yes, please.
Yeah,
if you could explain that.
Sure. So what we do is you have the ability, if you have to sell it electronically or if you need to sell it over the phone, it is an app process. It is an e-app. And it's basically, it allows you and the client to look at a screen. We're going to send them a document that they can go through. And then when we go to collect signatures, it would be that signature process is utilized off of a DocuSign, very similar to DocuSign. We actually call it HelloSign. So they will receive a packet that they will be able to open up. They'll sign with either a mouse or their finger or however they do it. And then they will send it back to you and then you'll submit it back to us. So it allows you the ability to sell electronically without being face-to-face with a client. Now, the good news is that sounds a little convoluted, and I agree it is a little convoluted because sometimes people don't understand a DocuSign process. So what we are currently working on that hopefully will be out in the next month, month and a half, is you, in that process, you will send the client an SMS text. It'll be a 6-digit code that they'll receive on their phone. They'll read back the code to you. You will plug that into the application, and that will be their signature. So that, and then all the other processes go away. You'll have one way to sign all applications from a remote perspective with that 6-digit code. And again, that's probably at about a month, month and a half away from happening.
Awesome. I'll just
Okay.
reiterate that you do have to choose remote e-app in the beginning. I don't know if you have that in your screenshots of
Yes.
when you went through the application.
Yeah.
But go ahead.
Great point. Great point.
Yeah.
Because by choosing that, that's what triggers how the signature process would work. If you don't choose the remote e-app, that would mean you're using the e-app face-to-face with a client. You would flip your computer or your tablet, whatever you're utilizing. They would then take it, sign it with their finger, and it would be a face-to-face e-app. So it's very important that you choose remote if you're doing it Zoom or, over the computer or however you're selling it.
Another
So great,
thing, the
great point.
third-party call, is that something that they're going to have to do?
No third-party call.
Thank you, Jamie.
I hate third-party calls.
Yes, most of us as agents do.
Yeah, as long as you choose the remote option on any of the products, then there's not a third-party call. If you do not, there is.
That's
Not on this term product. This term product, there's no option for that. There's only 2 ways to sell it. On our other products, there is an option. If you do not choose the remote with that hello sign option, then there is a third-party valuation. Most people don't utilize it, but it is available out there.
So remember, guys, choose that in the beginning, the remote e-app.
Yep.
Thank you.
And as I said, once we get the SMS text, then it won't even be an option. So it'll make life even easier. Any other quick questions? Because I'll run through the other 2 real quickly, but because I know your time is very valuable. But I want to make sure I get all the questions.
You're doing great, brother. You're doing great. We appreciate you. We appreciate your time.
No worries. Okay, so we also have, in addition to the family freedom term, we do have 2 final expense products. And I'm going to go through them real quickly. And again, at a later date, I'll be more than happy to dig into them deeper with you guys. I know that the term product is really kind of your bread and butter, but just to give you this in case you run into some other clients, our traditional final expense is called New Vista. Again, it's a simplified issue final expense, just kind of like what we talked about before. It is available for ages 50 to 80 with a maximum death benefit of $35,000. There are 3 different plan designs that your client could qualify for. Obviously, the level would be A. That means that everything is good. We accept them day 1. The death benefit's available day 1. We also offer a graded or a modified plan, and it's really based upon the health condition of your client if they were to get a graded or a modified. A graded, there's a 2-year grading, so their death benefit, they would not get access to full death benefit in the first 2 years. It's on a scale, it's on a grading. The modified, pretty similar. It's a 2-year modified plan if they were to die in the first 2 policy years. And these are utilized mostly when you have clients that are less than healthy. What I will tell you about the New Vista, there's a lot built in, a lot of room from an underwriting perspective built into the level plan. We are incredibly diabetic friendly with this particular product. On this product, I don't ask the client any questions about diabetes. I don't ask them what medications they're taking, how many they're taking. I don't ask when it started. I don't ask their A1C. I don't ask any of those questions. The questions that we are looking for is complications due to diabetes. Those are the questions that are going to dictate if the client gets level graded or modified or they're an outward decline. Most clients that have diabetes that are on 1 or 2 drugs are going to go level with us. It's only once we see complications is if they're going to be graded or modified. Obviously, it's a great product for the senior market. There is an accelerated death benefits included. They can put an accidental death rider on it as optional, an additional premium. Again, very, very client friendly. And again, same e-application process as we talked about before. With this particular product, they can get a paper app if you so choose. But once you do the paper app, then you're going to bring in the ability to get that third-party call. So we don't get a whole lot of paper. About 96% of our policies come in on the e-app. Again, very, very competitive out there in the market. The big thing with us, as I said, is the diabetic friendly. The other big thing is a lot of carriers, what they do is if your client qualifies for a graded or modified plan, in most cases, the client, if they get that particular benefit, you, the agent, you have to give something up. So most carriers, if they issue that graded or modified, they tend to cut your commission anywhere between 40 and 50%. We do not do that at Prosperity. Whatever underwriting class your client qualifies for, we pay you the exact same commission. We do not ding you because your client is less than perfect health. The other thing we do not do, most carriers, if you're selling an older age client, 75 to 80, they will cut your commissions by as much as half. We do not do that. We pay you the same commission no matter what underwriting class your client comes in. And if they're at the older ages, we still pay you the same comp. So again, trying to be as agent friendly as humanly possible, giving you that ability on the diabetic to give you that friendliness to be able to write more clients. And it's a great, great product in that scenario. And again, trying to be as friendly to you, the agent, as possible and get as many of your clients through from an underwriting perspective as we can. The third product is called our Prime Term to 100, and it's really one of the easiest products out there. It's one of the product that very, very few people know we have, and if they know it, they don't really understand it. So here's how it works. It's as close to a guaranteed issue product as you can get without it being guaranteed issue. It is not guaranteed issue. We are going to do some underwriting on it, but it is incredibly liberal. It is, again, another simplified issue product that's available on an e-app. It's for ages 40 to 80, up to $30,000, the maximum face. We do grade it just as we do with the New Vista. This one is graded over a 3-year period. There are 3 health questions that the client has to say no to. There is an accelerated death benefit that's included, as well as the optional death benefit rider. So here's how the 3 health questions go on this particular product. The first question asks if they're currently in a licensed facility, obviously a nursing home, a hospice, assisted living, something like that. So if they say no to that question, we then go move to question 2. Now, this is the big question. This is the one that's most important. So we ask them we ask the client in the last 24 months, the last 2 years, have you been diagnosed with the major illnesses? Heart attack, cancer, stroke, major organ transplant, do they need oxygen, blah, blah, blah. It's like 7 major conditions. Now, the key there is, have they been diagnosed? It does not say, are they currently being treated? So if you, for instance, had a client that was diagnosed with cancer 2 years ago, still has the cancer, still going through treatment, they would qualify for this product. If they had a heart attack 2 years ago, they still would qualify for this product. The question says diagnosed, not treated. They could have multiple diagnoses as long as they're out more than 2 years, they would qualify. The third question says, do they have less than 12 months to live? If they answer no to those 3 questions, they have an opportunity to get this particular product. So again, when you've got clients, what happens a lot of times, agents will go to a client's home. A client has been turned down for a policy 3, 4, 5 times, whatever. They say, there's no way you're ever going to get me insured. What happens is a lot of agents will go and reach for a guaranteed issue product because they're in the home, and I get it. I was an agent. They want to write a policy. They want to help the client. They don't want the client to hear no again. They grab the guaranteed issue and then away they go. I would implore you, before you do that, run them through the prime term to 100 and see if they'll qualify. 30% of the clients absolutely are guaranteed issue. No ifs, ands, or buts about it. They have significant challenges, and there's no other way they're getting life insurance, unless they get a guaranteed issue product. The other 70% that buy probably can do better with a prime term to 100. And I'll give you an example. I helped develop one of the big guaranteed issue products that are out there right now. So a 65-year-old female, I know this off the top of my head because I helped develop it, a 65-year-old female on a guaranteed issue product from this particular company, one of the most competitive ones out there, for $25,000 face would be about $201 a month. Prime term 100, if they qualify, same $25,000, 65-year-old female, would be $164 a month. So a significant savings for the client. And that may be the difference, because the client may say, I want the insurance, but they can't write a $200 a month check, but 164 is a little bit easier for their budget. So it gives you opportunity and options when you're out talking to people. This product's not right for everybody, but for the right client, it makes a lot of sense. So it's just another thing you have in your tool belt when you're out talking to people. And really, that's why we love doing these kind of meetings, to really kind of point out where we're really good and give you some ideas, so you can hopefully help as many people as humanly possible. So with that, I will be quiet for a minute or two and see if there's any other questions I can answer. There I am. I'm back.
Just want to add, thank you so much, Jaime, for going in depth into all of these products. I just want to add, with the prime term to 100, I don't know where my mic is, if you can hear me. When you first introduced it to us, I remember being like the aha bulb went off, because for us specifically, we have an autistic son, and he was diagnosed already. He's a child, when he's not insurable for most products. But there's a lot of people that have adult, that obviously this starts at age 40, so it has to be an adult, but they don't have any other medical conditions, and they have been diagnosed as children. So that would include something like Down syndrome as well. I would imagine that they don't have any medical issues. They don't live in a facility, and they don't have 12 months to live. So they would be able to answer no to those questions and get some coverage. And I know we've had parents that are getting elderly that have adult children that they worry about. So that's something that I don't know if, particularly we have that kind of scope because we have a child with special needs. But if you come across a client that says, I want to have a final expense for me, but my son or daughter, what can I get for them? That would be something that would be available to them. So that was a great product. Thank you, Jaime.
Absolutely. And it's like everything else, right? It's like, the other day I'm thinking about, I want to buy a new car, and I have a car in my head, and I've never seen the car anywhere. And then the minute I say I want to buy that car, then I see it everywhere.
Then you see it everywhere. Yeah. There's some kind of
learn,
name for that in psychology, right? That there's like then you see it everywhere. Yeah.
Right. When you have knowledge, it's amazing, because you run across so many people and you're like, oh my God, they're perfect for that product.
Yeah.
Or you're in a house and you see somebody, it says, oh my God, I can't afford insurance. It's way too expensive. And well, you have some challenges, but I have a product. Let's run it. And all of a sudden they're the happiest people in the world, because they've been told no forever. They'll never cancel their policy because they're very appreciative that they got something. So
correct. Yeah, those people stick for sure, because they know it wasn't easy to get a policy to begin with.
Exactly.
Jaime, can you pull up that slide that has the bonuses a second, please?
Absolutely.
Does anybody else have any questions, comments, or concerns?
I just bored everybody. They're all asleep.
They just went to sleep. I do that to them every week, so don't feel bad. But we're not going to bore you now, guys.
Notes.
We're not going to bore you now. We have some important information, guys. If you take notes here, what it says, a 10% bonus. We are in quarter 2, 2023, as of the time of this recording. We have from April 1st through June 30th. So I'm going to announce 2 major promotions. Number one, the big one here is that anybody who hits this promo between now and June 30th, we will be doubling the bonus times QBI. Okay, so you got to write good business. Don't just write business to hit bonus, right, or get on the scoreboard. So it'll be the second 10% will be times QBI, but you have a potential here to make anywhere. I don't know, if you do 100,000, right? That's a $10,000 bonus. You can get $20,000. Talk about a phenomenal Christmas, right? We're going to fund that in July. And we hope that you use some of that to have a great Christmas, take your family on a trip, and something that you're well deserved, right? So that's the first big bombshell announcement today. We're doubling the bonus in quarter 2, 2023 for Prosperity. So guys, get after it. We're putting our money behind it. They're putting their money behind it. We really want to be relevant in the room with Prosperity. Okay. Number 2, and that's for those of you guys who are watching this recording today or you're live, right? From any business written between now and the 17th. So I'm going to give you guys a whole week, right? Between now and the 17th, midnight with Prosperity. Any business, any one piece of business will qualify you for some swag, for some cool stuff from the company, right? And we'll put some extra stuff in there as well. But we want to get out strong this week and write business. I know we wrote Prosperity last week. I saw a few of those deals come through, which is pretty cool. But I want to make sure that this week we start pumping, the gas pedal here, right? No brakes, all gas. So we'll get some Prosperity swag. We'll probably get some Powerhouse swag as well for all business written between now and Monday midnight of next week, which is April 11th through April 17th. Okay, guys. So we have those 2 promotions going on right now. Again, my biggest love would be for you guys to hit that bonus, and take home $5,000, $6,000, $7,000. Actually, it would be $5,000, $6,000, $7,000, $10,000, $20,000 in bonus. There is no cap, right? There is no cap, as Jamie was saying, right? If you guys write 100,000, 10% bonus on 100,000 is 10 grand, and we're going to double it. That's 20 grand, right? That's a pretty nice sized pig if you guys want to. Roast a pig for Christmas, like Cuban style, right? If you want to go more than that, $500,000, whatever, right? Those are pretty big checks that we're ready to write, and Prosperity is ready to write as well. So that's that. Mrs. Torres, do you have anything to close out this call for today?
Just want to thank Jamie one more time, and you unshared, but on that last screen that he had up, it did say that was fast and easy onboarding from a contracting standpoint. They're super easy. The links go out to you. You just fill it out. You complete your AML right on that application process. And then 24 to 48 hours, you have a writing number. And then once you have that, you just click on the link in your email and it has your optical ID. You can write a policy. It's really that simple. So if anyone that's online now or later at the replay is not contracted, please go ahead and email us so you can get a link and get contracted today.
And they're going to email
That's
contracting at Powerhouse.
At Powerhouse FIN. I'll put it in the chat.
Okay, so it's contracting at powerhousefin.com. Jamie, thank you so much for being on, man. We're going to rock this hard. We'll keep promoting it, and we keep working with you. Let's get relevant in the room. Let's build it big, man. I appreciate you. Love everybody. Have a great day, guys. We'll talk soon.
Thank you so much. Have a great day, guys.
Thank you. Bye-bye.
Thank you. Thank you very much.